Hello, everybody, and welcome back. Today, my guest is Michael Barr. Michael is the lead portfolio manager for the recently launched Space Economy Fund at Neuberger Berman. Welcome, Michael.
Thanks for having me.
Michael, you have recently launched a new fund, the Space Economy Fund. Why is it now the right time for such an investment?
So that's a good question. I think we have to kind of start from the beginning. And Neuberger has a history and commitment to thematic investing. And we're always looking for a couple key points when we do new themes. The first one has to be at an inflection point. And the second part is it has to have long duration. This isn't something that just happens in the next 2 or 3 years. We want a decade of opportunity here where we look out. And the third is it has to be exposed to multiple sectors, right? You can't just have a singular tech fund or a singular industrial fund. We want it to touch many end markets. And when we look at the space economy, they hit all of those aspects in our opinion. And over the past several years, we have noticed something very key. We have noticed the transition from the space ecosystem from a risk-averse, high-cost government enterprise, and they're transitioning to more of an innovative, low-cost, commercial-driven business models. And this increased investment is improving access to space, lowering access to space, and it's opening up a huge opportunity where these smaller companies and, if you will, entrepreneurs wouldn't have access. It was government domain. And throughout history, we've seen this happen, right? There's been a lot of situations where private enterprises have entered a market and significantly unlocked economic value. So governments will always play a role. We don't want to ignore that. They're going to be there the entire time. But we're really excited about the commercial aspect of it and the building blocks there. And the transition is going to take some time, but we actually think Bill Gates said it best when he talked about we always overestimate the change that will occur in the next 2 years and underestimate the change that will occur in the next 10. This is where we are. We're not going to time it perfectly, but we have seen enough to show that we believe we're at this inflection point from government to commercial. And I think many investors would have loved to have been early on the internet theme, the automation theme, the AI theme, right? They would have loved to have been a little bit early than a little bit late. So when we add it all together, this transition from government to commercial, opening access to space, lowering cost of space, that's why we think we're at an inflection point, and that's why we think now is the time.
Hi there, just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now.
What are the key technological and economic drivers and use cases for the space economy right now?
Just because we believe we're at an inflection point, like we just stated, it doesn't mean that we haven't been harnessing space-based technology for decades now, right? And we highlight this. The Space Foundation just recently came out and said they estimate the space economy was $469 billion in 2021. So how to think about it, and some people don't understand the full reach of what we use space for. Everyone knows about broadcast TV. That's a simple one everyone's aware of. But some of the core technology that we think of, like global positioning or GPS, right? That technology can enable precision agriculture, right? That enables us to is being leveraged by farmers across the globe to reduce waste and improve yields, right? Another one, ride sharing. You take out global positioning, ride sharing is basically just a taxi service. So there's plenty of business models already utilizing. The other thing we like to think about in more emerging cases, GPS was, if you will, legacy technology in space. You have Earth observation and communication satellites that are now just being put up in space. So think about communication satellites, right? We think the communication satellites will have opportunities to improve the digital divide, allow the internet access on a global basis. The other thing they're going to be able to do is allow remote access of Internet of Things. So think wind farms or remote mining. We don't need people to go check if a wind farm if there's an issue at a wind farm. Global satellites and communications will allow access and allow understanding. The other thing to think about is Earth observation. We are now putting satellites up there that are tracking the Earth 4, 5, 6, 7 times a day daily. right? That is generating a huge amount of information that we are going to be able to use to track global supply chains or city infrastructure, right? And one other important thing we want to highlight is this data is going to be exceptionally important for ESG or sustainable aspects. These satellites are ones that can track and monitor some of the causes of climate change, right? So when you look at it, yes, there's a legacy of what people think of space, which is rockets and satellites. But when we think about it, it is significantly more. So there's tons of economic drivers and there's tons of use cases from the space economy that we're just getting started with.
So innovation often comes from small and specialized companies, but in your portfolio, I took a glimpse at it. There are also some classical, traditional companies like Airbus. So is a space economy pure play portfolio even possible?
I'll start here. Specialization is important, but this theme is more about evolution and not revolution, right? We are going to be building blocks. So there are going to be pure play companies that are going to be hugely important to the evolution of this theme, but they're also going to be well-established companies that are investing in space-based capabilities that are just as important to the evolution of the space economy. And we want to be mindful when we build a portfolio, mindful of the entire ecosystem and where there's going to be future opportunities. So specifically to your question, could you build a portfolio on pure play space-based companies? The answer is probably yes, but we think you would miss a host of other opportunities. Like I said earlier, space is so much bigger than rockets and satellites. And when we sit back and think about it, questions we ask ourselves is, how should we think about the capabilities of ground station or the cloud infrastructure to help harness all the data? How should we think about protecting that data and those touch points that are growing exponentially, right? And what about companies that leverage GPS or Earth observation or communication satellites as core to their infrastructure business model? They might not be pure play space companies, but they're leveraging space capabilities to drive their business. All of these is what we think about as we think about the space economy. So a pure play could be done, but we think this industry is so much more than the legacy way of thinking about space. And we want to take a holistic view when we think about our portfolio.
So especially technology innovations and thematic investments often go through a trough of disappointment after a hype. So you mentioned the internet economy, and we all remember the bubble of the early 2000 years. So how do you intend to avoid this volatility with your thematic strategy?
One of the things is embedded in the first question of how Neuberger thinks about thematic. One of the things we always think about and have in our minds is hype versus fact, right? And we are mindful to avoid hype. And we start our screening process of how we think a script, what the basic principle is of being allocated into our theme. Now, I think it's very important, just because you get past the screen of purity for the portfolio does not mean it's going to get into the portfolio, right? Neuberger Berman has a long history of fundamental research, and we are not straying from that reputation just because we're doing thematic portfolios. What we do is we leverage our entire research department of analysts to make sure not only do we understand the theme and how they're associated with the theme, but the underlying fundamentals of these companies, risk-reward characteristics, cash flows, market positions, any disruptive capabilities that they have. So when we think about the portfolio, we think this sets us apart because it's not just 50 names associated with space. It is 40 to 60 names that have a fundamental rigor behind them, an execution of process, interaction with management. So we really pride ourselves on fundamental research that is overlaid over the thematic. And we think that sets us apart, and we think that helps us avoid a lot of the hype that we admit is could be a risk in some of these thematic investments.
So the satellite business is not new. Where do the massive growth forecasts come that you are predicting?
Listen, we agree that the industry is not new. With estimates over $400 billion in 2021, it's already a fairly large market. But we think, more importantly, the investor should think about the next evolution of this. And we see the current dynamics of lowering launch costs, improving satellite capabilities, is unlocking new business models and allowing new entrants into the market. It's almost a virtual cycle of lower cost, higher demand, new businesses, and that just keeps a virtuous cycle. And we've seen this play out in the past, right? Think about the evolution of the auto and infrastructure of the auto industry. Think about the evolution of the personal computer, right? Our favorite when thinking about space is the analogy of the smartphone, right? Before the smartphone existed, the cellular industry was already a fairly large and established industry. But then the smartphone came along. And this is our analogy, right? The smartphone had to build out their infrastructure. They had to get cell phones out of the hands of consumers and the smartphones into the hands of consumers. Right now, the space economy is doing the same thing. We need to put satellites in space. We need to proliferate the capabilities of satellites in space. The next step was the enabling of the technologies, or if you will, the App Store. The App Store created a way to try to unlock and harness the potential of the smartphone. In the same way in the space economy, we think advanced sensors, advanced communications, cloud computing, advanced antennas on the ground, that is enabling us as a society to unlock the capabilities of these satellites. And the final and most important one was the application, right? We used to have, before smartphone and before applications, a phone you just talked on, and a smartphone was just a more advanced way to talk and text, right? Now it is indispensable with everyday life. Check the weather, you check your Instagram feed, you check everything, where your kids are. It holds everything for us. And the same thing is going to be true in space. Once we unlock it and the new applications that we aren't even thinking about are in existence, you're going to unlock not only a huge amount of TAM for the industry, but a huge amount of other opportunities in other industries that can harness this capability. So to your question, why are growth forecasts, even though the satellite industry isn't new? Well, before the smartphone, the cell phone industry is quite large, and the smartphone came along and massively expanded that market. Based on our analogy and how we think about it, we think that same playbook is on the horizon for the space economy to really build and expand the opportunity set at these industries.
Aerospace and space technology, it's characterized by the military industrial sector. To what extent can this investment theme be combined with a sustainable investment approach?
I'm very actually happy you asked that question, because I believe there is a misunderstanding of what space is in relation to ESG. We all know when we think space, we all think about the rockets going up and to the moon or to the International Space Station and the plumes of rocket exhaust that people think of. But what we see is the satellites that are going up there provide true actual opportunities to measure the carbon footprint, right? And as the old saying goes, if you can't measure it, you can't manage it. So satellites provide the ability to measure many of the gases that lead to climate change. We've heard of instances where the self-reporting of companies and the actual carbon emissions that are had during any point in time can be off by almost 5.5 billion tons, right? So you are creating an issue where this is what's being said and this is what's being done. Now, it's nobody's fault because there's no way to accurately measure methane gases, greenhouse gases, apart from space. That is how you measure it accurately. And what space is doing in space capabilities is providing a scientific baseline that both governments and corporations can build off of and utilize. So when we think in the future, right, the terrestrial technologies will be the ones that hopefully will put an end to climate change. But the satellites are what's going to be the building blocks and the first step in this process, because you have to be able to measure it, and you have to be able to measure it accurately. And you can't have disagreements between one entity and the next entity. They have to understand what they're measuring. And that's the beauty of space-based technology and and satellites in space. And when we're really excited, we want to let this be known that space is the building block and the start of the infrastructure to really combat climate change. So we think it is a very sustainable portfolio, even though when people first think about it, they might have a pause to really understand what's going on.
You're using a global stock index as a benchmark for your fund. So how can the space economy theme be combined with a traditional, let's say, US heavy or global equity portfolio?
I think I'd pose it back at this. It's like in all markets, including the current one, a well-rounded exposure is key for clients, right? And in our space economy fund, we not only want to have global exposure, somewhere between 30 to 50% at any point in time, 20 to 40% at any point in time, but we are also differentiated, right? If you think about historic, to your point, US heavy equity portfolios, they're probably going to have a large position in Amazon or Microsoft or Google, ExxonMobil, things like that. Our portfolio doesn't. They're smaller. They're typically mid-cap portfolios in the top 10. They don't overlap. So we think it's really important that there is a space for thematic portfolios and a client's overall portfolio. It doesn't need to be the predominant space. It doesn't need, but it does deserve a position, right? And the position is all about differentiation. Differentiation drives diversification. And the other thing, it's a little bit on the softer side, right? But the other thing is a client, when you buy a US-centric equity portfolio, they're buying an investment, and that's kind of what they're doing. You get into thematic, and it doesn't have to be this space portfolio. It can be mobility. It can be Internet of Things. A client can get engaged in what they're buying and the theme of what they're buying, and they'll want to be educated on it. Hopefully it will spark their curiosity, and it's not just putting money to work. It's using your imagination and what can change and how they're driving change and investing in this change. And like I said, that's kind of the softer side. We talked about the diversification and building a portfolio, but I think thematic investing is really intellectually stimulating for a lot of clients because they get to invest in themes that they find very interesting and can research about it. So we think it definitely has a spot as kind of right along with a lot of these overall portfolio construction.
So this was Michael Barr from Neuberger Berman. Thank you very much, Michael, for being with us today and sharing your insights and this amazing investment opportunity of space economy investing.
Perfect. Thank you for having me. I really appreciate it.